Look, if you're sitting on the sidelines waiting for a market to give you a sign, you're effectively choosing to stay broke. The people actually building wealth don't wait for permission or the perfect setup. They move in markets that feel boring, unattractive, and uncomfortable, the kind most people instinctively avoid. They buy the houses that look wrong, live in neighborhoods where you have to lock your door, and fix problems themselves instead of paying a premium for comfort. This doesn't require a 100-page business plan or a massive inheritance. This guide is for the everyday salaryman. It works because most salarymen with stable jobs refuse to get their hands dirty. If you're willing to trade a little comfort for leverage early on, the door is wide open. The biggest lie in real estate is that success depends on timing. Almost everyone approaches housing as a consumer first. They want it clean and move-in ready. The second you demand that, you're competing with everyone else. Families, emotions, and overbidding. Real opportunity starts where consumer preference ends. I'm talking about outdated kitchens, awkward layouts, and homes that are functionally fine but visually rejected. It's going to look inconvenient and slightly embarrassing to explain. That's the filtering mechanism. If you need validation before acting, this won't work, which really is true with anything worthwhile. You don't need to be a hustler or an entrepreneur to do this. In fact, the traits that help in business, like high risk tolerance and constant speed, can actually be liabilities here. This path rewards stability. A steady paycheck qualifies you for the loan. Consistency lets you save. You aren't trying to scale yourself. You're using property to slowly replace your dependence on your day job with property ownership. The biggest mistake beginners make is starting to search in the comfortable middle. These are the $300,000 to $500,000 houses that look clean and feel aspirational. But structurally, this is the worst place to build wealth. Prices are high because you are competing with the broadest possible buyer pool. Families with Pinterest dreams and white-collar employees who have zero trade skills. They demand turnkey comfort and are willing to overpay for it because they are terrified of a paintbrush. When you buy here, you're buying a premium for someone else's work, leaving zero meat on the bone for you. It's a status treadmill where your costs are high and your ability to add value is capped. Now, some people look at the other end of the spectrum, luxury real estate. In the A-class world, the margins can be huge, but the barrier of entry is a brick wall. To play in luxury, you need massive amounts of capital up front, capital you simply don't have when you're starting from zero. So, if you're excluded from the top and squeezed out of the middle, where do you go? If you're starting from scratch, C-class neighborhoods are your goldmine. This is where the average buyer walks in, smells the stale cigarettes and sees the 1970s carpet with disco fever stains and immediately runs for the exit. That discomfort is exactly what creates mispricing. You're looking for homes that are neglected but structurally sound, ugly but honest. You look for sweat equity. Sweat equity is the only way to manufacture money without a bank. Most people think a house is worth what the neighbor's house sold for. That's wrong. A house is worth its utility. By doing the work yourself, the painting, the flooring, the basic plumbing, you aren't just fixing a house. You're converting your own hours into permanent equity. You're buying a property at a $50,000 discount because it's ugly, spending $10,000 on materials and your own weekends, and end up with $40,000 of free wealth and monthly rental income that didn't exist before. This is the only path for the non-entrepreneur. You aren't speculating on the market, you are forcing the value to go up through your own labor. And look, C-class today isn't what it was 20 years ago. The middle class was squeezed downward, which is why today's C-class is filled with blue and white collar tenants who stay long-term and pay reliably. If you're looking for a deal on Zillow with professional HDR photography and an open house sign, you're looking for a retail product. You are shopping, not investing. To build wealth starting from zero, you have to look for distress. Real estate is a slow, sentimental asset. Most people only sell when they want to, but a deal happens when someone has to sell. This usually boils down to the 4 Ds: death, divorce, distress, and disaster. When you're dealing with the 4 Ds, you aren't buying bricks and mortar, you're buying someone else's problem. Take death and divorce. These aren't just tragedies, they're logistical nightmares. Often the heirs or the former couple just wants the asset gone. They don't want to spend 6 months renovating it to get the top price. They want liquidity, and they want it yesterday. If you show up as a serious, low-friction buyer who can close quickly without demanding a pristine house, you provide a service. They trade equity for speed. Then you have distress and disaster. This is the house with the failed inspections or the cash-only tag. This is where most buyers get scared. They see a cracked foundation or a dated electrical panel and see a money pit. But as an operator, you see a filtered market. Because the house can't get traditional financing, like an FHA loan, 90% of your competition is instantly deleted. They can't buy it even if they wanted to. If you build up even a small amount of cash, or you have a private lender in your corner, you're playing in a pool with almost no sharks. You aren't lowballing these people. You're offering them a solution to a problem that the retail market refuses to touch. Your profit is simply the fee the market pays you for taking on the risk and the mess that everyone else is too sophisticated to handle. Most people treat renovations like an HGTV episode. They want the mood boards, the open concept walls, the marble islands. If that is you, you've already lost. In this game, renovation is a surgical strike designed to extract the maximum amount of equity for the minimum amount of cash. This is where your sweat equity becomes real. Every dollar you don't pay a contractor is a dollar that stays in your pocket as permanent wealth. You don't need to be a licensed builder to do this. You just need what I call YouTube apprenticeship. Everything you need to know about the high-impact 20%, patching drywall, laying luxury vinyl plank flooring, swapping out 1980s light fixtures, or painting a room is available for free. Your tuition is simply the willingness to spend a Saturday covered in dust, looking at a screen and figuring it out. But you have to be disciplined about your brutal priorities. Beginners often get distracted by pretty things while the house is rotting from the inside. Use this hierarchy. First, the guts, meaning the mechanicals and safety. If the roof leaks or the electrical panel is a fire hazard, nothing else matters. You fix the things that keep the house standing and the insurance company happy. This is where you might actually hire a pro. But because you're doing the rest of the work yourself, you can afford to pay for quality here. Second, the canvas, meaning high-impact cosmetics. Once the guts are solid, you move to the visual rejection factors. I'm talking about the big three: paint, floors, light. A fresh coat of white paint and modern flooring will do 90% of the heavy lifting in a C-class neighborhood. Third, the ego. This is where you skip the granite countertops, the designer tile, and the smart home tech. In a blue-collar neighborhood, nobody is going to pay you an extra $200 a month in rent because you installed a Nest thermostat. The goal isn't to build a monument to your own taste. It's to take a house that was visually broken and make it clean, safe, and functional. By doing this work yourself, you're effectively buying your own time at a rate of $50 to $100 an hour in the form of home equity. That is how you turn a steady paycheck into $1 million portfolio. You want to buy, renovate, and then rent out. After you have enough saved for the next down payment, you do it again. You also don't sell if you don't have to. I don't believe in selling a productive asset just to squeeze out a little more ROI somewhere else. Anyway, if you want to build wealth from zero, that first property is more like a proof of concept. It's the first gear in a machine that eventually runs without you. Once you finish that first renovation, your relationship with numbers changes. You stop seeing a mortgage as debt and start seeing it as arbitrage. You're borrowing money at one rate to control an asset that produces value at a higher rate. The goal here isn't to become a high-volume flipper, as flipping is more trouble than it's worth. It's about iteration. Your second property shouldn't be a level up into a fancy neighborhood. It should be a boring, predictable repetition of the first one. Real, and most importantly, stable wealth is built through the compounding of boring wins. Real estate is a relationship business, but most beginners get bullied because they don't have a filter. You need to understand the vibe to price ratio. In the middle of the market, people pay a premium for a good vibe, clean trucks, and a polite secretary. In C-class, you want the opposite. You want the guy who's covered in dust and drives a beat-up van, but whose work is solid. If the vibe is too polished, you're paying for their marketing budget, not their labor. Your goal is to find the highest quality work with the lowest aesthetic markup. When you find that guy, you use the cash lever. In a world of digital payments and 30-day invoices, cash today is a different language. If a contractor quotes you $5,000 for a job, offering a portion of that in cash on site the moment the milestone is met changes the math. You aren't just paying them, you're removing their financial stress. Often a cash today offer can shave 10-15% off a quote because it eliminates their billing overhead and risk. Finally, protect your downside with the wife pivot. Never be the final decision maker on site. Tell them, I like the plan, but my wife is convinced I should just do it myself. I need to go home and sell her on why your quote is worth the check. It kills high-pressure sales tactics and gives you the stoic distance to compare quotes without being the bad guy. Zillow is a great place to study the market, but it's a terrible place to find a deal. By the time a property has professional photos and a new listing tag, it's already been processed by the retail machine. To find real mispricing, you have to move off market. This isn't about complex marketing funnels or cold calling thousands of people. It's about being a neighborhood operator. You need to drive to your target area, the ugly but honest C-class pockets, and look for signals of neglect. I'm talking about overgrown lawns, boarded up windows, or mail piling up. These aren't just eyesores. They're indicators of a seller who's overwhelmed. The strategy is simple. Direct outreach. You don't need a real estate agent for this part. You write a handwritten note or knock on the door. You tell them, I'm looking to buy a home in this specific neighborhood to renovate and hold. I love the character of your property. If you've ever thought about selling without the hassle of listing it, I love to talk. Most people are terrified of this because it feels intrusive. But remember the 4 Ds. Often these owners are sitting on a problem they don't know how to solve. By reaching out directly, you are removing the commission fees, the open houses, and the stress of the public market. You're offering them a clean exit, and in return, you get a price that isn't inflated by a bidding war. Off-market movement is how you bypass the competition entirely. It's the difference between being a shopper who takes what's available and an operator who creates their own opportunities. Your first deal won't be lost because of bad math. It will be lost because of your ego. Ego is the voice that tells you the house needs to validate you. It's what makes you want to show off a Pinterest-ready kitchen to your friends or buy in a neighborhood just because it sounds good at a dinner party. The second you make a deal about your identity, you've already lost. Real estate is a cold, indifferent asset. It rewards discipline and calibration. It punishes emotional attachment. I've seen people pass on incredible deals because the house smelled funny or the neighborhood had old cars in the driveway. They let a temporary vibe stop them from securing a permanent structural advantage. If you want to survive your first deal, you have to stay rational. You aren't a visionary or a designer. You're an operator looking for mispriced utility. The moment you stop caring about how the house makes you look and start focusing on what the house actually is, you become dangerous. The house doesn't need to be pretty, it just needs to work. By now, this pattern should be clear. Wealth in this game doesn't belong to the lucky or the perfectly timed. It belongs to the people who accept the market as it is and build structure, leverage, and resilience one ugly property at a time. The hesitation you likely feel right now comes from the same question everyone would be asking. What if I just wait? What if the long-anticipated housing crash finally happens and everything becomes way cheaper? I'm sorry to say, but waiting for a better market is usually a sophisticated way of doing nothing. You're trading your time for hope that isn't supported by the data. If you're still sitting on the fence because you're terrified of buying at the top, you need to understand why the crash you're waiting for is structurally locked out of this market. I broke down the how and why and what to do in this video right here. I'll explain why the floor is more solid than you think. I'll see you there.